Hello everyone, this is Matthew Fraley, founder of BreakpointTrades.com. I founded it 21 years ago back in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms like you see here with our 21 SPY and ES mean reversion systems and of course our amazing KISS systems, which later this week or early next week I'm launching the official membership to this, but been pretty amazing returns on these. You could take a look today. These are some of the new stocks that have new trailing stops. Google up to 18%, Nvidia up 36%. The previous trade was up 64%. So the system is absolutely killing it. Made 63% on the last trade. It's already up almost 37% here. Pretty amazing stuff. Here's Nvidia on the KISS systems right from those tables. You can see the system went long here recently on May 3rd, which that trade is up 37% already. You can see it set its initial smart trailing stop at 747, moved it up methodically 9 times. Current stop is 1082. You can see previously caught a nice trade. That's where it made over 62%. So pretty awesome sauce. And also, I'm going to be launching with the new KISS system service some of these smaller time frames of the KISS. So the KISS tables currently contain daily and weekly charts systems. We monitor 750 stock and ETFs. So I'm going to include a couple dozen of these smaller time frames. Here's Nvidia, 130-minute system. 130 minute, there's 3 daily bars, or 3 bars in a daily bar essentially, because there's 6.5 trading hours in a day. 3 times 130 is 6.5 hours. So here's Nvidia on the KISS system versus buy and hold. And again, buy and hold and Nvidia has actually been very good, obviously, but the KISS system still beats it by a lot. It's up 279% this year on 2 trades. Buy and hold's up about 147%. Last year it made 293% versus 239% last year. But again, the difference is the drawdown, guys. The KISS system took no drawdown in 2023, whereas buy and hold, you could see, took quite a drawdown. 2022, KISS system lost 2% on 8 trades for the year, while buy and hold you lost 50%. So quite the difference. So with the KISS system, it has dramatically higher returns. $10,000 turned into $283 million, which is crazy. Again, that's reinvesting all your profits. But on buy and hold, it turned into $6.7 million. So much less drawdown with the KISS system and higher returns. So best of both worlds. By the way, average hold time 57 days. 101 days for winners and only 13 days for losers. So that's an example of one of those high performance systems that will be coming with the subscription service. Anyway, back to this newsletter at hand. It is Wednesday, June 5th, and this is my detailed technical analysis of the market and our trading systems. This is our back-end recorder for our website subscription service. If you're on YouTube, that you should consider subscribing to us, because on YouTube you don't get all the benefits such as our access to our live charts and trade notification emails to our systems. So definitely consider subscribing. Membership is very reasonable. And anyway, I'm going to go ahead and get this recording started now. Hello everyone, this is Matthew Fraley with BreakpointTrades.com. This is the Wednesday, June 5th newsletter. Tonight's newsletter, as you can see, divided into 5 major sections. Same general theme as I always keep. Have the opening statement. We discuss some admin things. Then we go into the general market indexes, top-down approach for the S&P, NASDAQ, Russell 2000. We'll look at a few important indicators, the VIX, etc. A few major sectors. US dollar, Bitcoin, crypto, commodities, precious metals, GDX, and we'll review some trade ideas and recent setups. I didn't add any new setups tonight, guys, simply because the market had such a big day. The S&P 500 rallied over 62 points today for a new all-time high, so I didn't want to put a bunch of new longs out there. Maybe best to have some consolidation first. One thing, though, you can see right here, WHO warns of a new strain of bird flu, and as a result, some of these stocks related to that are jumping in after hours. I didn't have time to make charts, but these are some of these you may want to check on Thursday morning, maybe give you some trades. All right. Again, big rally in the market today. The S&P made new all-time highs. Remember, a couple weeks ago, we were warning about a 150-point pullback in the S&P 500. And one of our subscribers said, well, I guess that didn't happen. Well, the guy didn't know his details because it ended up playing out exactly. The S&P 500 pulled back exactly 150 points. It was actually 150.2. So that is close enough for government work, I'd say. You know, that pullback off the highs ended up simply being a simple fourth wave pullback, which ended last Friday with that doji hammer type candlestick where found support just above the 50-day moving average, and today we made a new all-time high in this fifth wave. Okay, you know, the pullback really, I favored that fourth wave more because it was really simple. You had very obvious four waves. You had a three-wave ABC pullback. You had a moving average ribbon pinch. It just looked like a fourth wave. We did present one scenario where price could have stalled into a supply zone and went to another low. I talked about that on the weekend, as you know. And price did initially stall in that supply zone, but it took it out, obviously, in a big way today. All right. Another thing, NVIDIA. As you know, NVIDIA's been running up pre-stock split. That 10-to-1 stock split officially goes on Friday's close, but it's not reflected until Monday. So NVIDIA's been running into that stock split. Maybe once we get that stock split, finally, you'll get a little profit taking by the rumor sell the news event. As far as the market news, initial jobless claims on Thursday, and of course Friday we have the big jobs report. We are seeing weakness in the economy. It's spreading, but again, so far that hasn't mattered for the market. All right, I do believe it will matter though later this year. But we continue to trade the trend, and that's the beauty of our KISS systems. They simply follow the trend. Next, image number 2. So here's a couple charts, and again, I'll get to these further below, but again, the chart on the left is a daily chart of the S&P 500. And like I said, that pullback in the lows of last Thursday or last Friday, where that low was just almost tagged that 50-day moving average, that ended up completed in the wave 4. That's really what I favored, even though I showed another scenario where we could have came down again. I mean, this is really textbook. Elliott wave is not always this clean, but this was very obvious. 1, 2, 3, 4. Now we're in this wave 5. You had the pullback, you know, just very symmetrical. You had the moving average ribbon pinch. That's another thing I teach. When the moving average ribbon changes configuration, it was bearishly stacked here, then it flipped positive, and it's that first pullback squeeze is almost always a great buying opportunity. So everything lined up there and moving up. So now I will say this, again, never get complacent with the markets, guys. All right. We are forming some MACD divergence. That's something to keep an eye on. Here's these other smaller time frames, 60-minute, 30-minute chart. Again, you can see the wave count broken down in a 60-minute. You had a nested 1, 2, 1, 2, 3, 4, 5 we're in right now. And again, last Friday, price, where it pulled back here, bounced perfectly off this demand zone, as you know. And on the weekend, I talked about these supply zones, and price stalled initially at the supply zone. And it had a pretty good pullback from supply zone earlier this week, okay? But obviously then finally today took that out. Next. Let's talk about the KISS systems, guys. So again, on the website, go to the system section, go to KISS STS tables. Here's the BPT basket. You can see all these had new smart trailing stops today. Coinbase, well, looks like it just took a initial trade here. The previous trade, it made 53.5%. Congrats if you took that. That was an excellent trade. Google, looks like it took a new, it had a new trailing stop today. That trades up 18.39% from the March 18th entry. The previous trade lost less than 2%. Big deal. NVIDIA, new smart trailing stop, the ninth one, trades up about 37%, and the system previously caught a 63% winning trade. It's pretty awesome. So that's the beauty of the KISS system, guys. And again, I'm likely going to have a webinar here soon. I'm going to talk about the subscription service here, the premium, the SMS, all this stuff. We'll go over that in a live webinar. But you can see some of these other. Here's UPRO. It's up 11.3%. Remember, that's the triple leveraged ETF for the S&P. Previous trade, it made 54%. So just knocking them out of the park here. Next. Chart number 4, here's NVIDIA. So NVIDIA, again, that trades up about 37%. Current stop is 1082. System went long here on May 3rd with an initial stop at 747. Remember, that last trade made about 62%. So system's been doing extremely well. That's the beauty of the system. It'll keep you in an uptrend and just continue to raise those stops. Let's just take a look at some others. Here's UPRO. Remember, that's the leveraged ETF for the SPY S&P 500. You can see caught a monster trade from last year into April there, and went long back in May. And you can see it's got a smart trailing stop right there at that higher low. Trades up 11.3% already. The previous trade was up over 50%. Chart number 6, here's Costco. I like Costco much better than Sam's. I'm sure a lot of you do as well. So Costco trades up 17.3% from this May entry here. And you can see it caught a monster trade before. Current stop is 793. Here's NVIDIA. Again, NVIDIA, remember guys, it's been running up on this coming stock split. The stock split is at Friday's close, but it's reflected at Monday, June 10th. You can see it had a bull flag here. I had this as a long, again, in Monday's newsletter, and obviously broke out nicely. Again, the KISS system, remember, went long back here in early May. So if you're following that, you're already long. Now, there is a little RSI divergence here setting up, just to be aware. Also, guys, image number 8. So this table shows you one of the KISS systems as a 130-minute time frame. This is one of my high performance. So I'm going to be including maybe a couple dozen of these high performance KISS systems. They're going to be smaller time frames, 130-minute, half day, 78-minute, 30-minute, stuff like that. But again, NVIDIA is one of them, and this is the 130-minute version. And you can see, awesome gains here. It's already up 279% this year on just 2 trades, beating buy and hold by quite a bit, same as last year. And of course 2022, where buy and hold lost 50%. The system only lost 2%. Okay, much less drawdowns than buy and hold, clearly higher gains. So great example. Again, we're going to provide SMS text messaging for all these as well, so you can get notified. That'll be a benefit. Next, let's get back to the newsletter general market analysis. So item number 9 shows the index sector table, what transpired today and this week. You can see big gain for the market. S&P up 1.2%, NASDAQ up 2%, Russell up 1.5%. Everything's up except for the Russell. As far as the 21 market sectors, pretty broad-based rally. 3 sectors were slightly down, more defensive, like consumer staples and utilities. Everything was up nicely. Even energy ended up being flat today. Remember, that's been a very weak sector. It's been the weakest sector this week. XLE Energy and oil services. Currencies, US dollar up 0.1% today, down 0.35% for the week. Cryptocurrencies up, and they're moving up with the market. Remember, I said they would just simply follow the market, and they are. And commodities, mostly to the upside here. A couple sectors down in the ag area. Precious metals continue to rally here, as you can see. Not surprising given what's going on. Gold up 1.2% today, silver up 1.5%. GDX, the miners, up 1.8%. And bonds, the 10-year, 30-year continue to move down. They broke recent supports earlier this week, and that is helping the market. Next, item number 10 shows the economic news calendar. As I stated, Thursday we have initial jobless claims and natural gas inventories, and Friday we have the jobs report. So let's see how the market reacts to that. Let's jump to the index charts. First chart below, item number 11, is the daily snapshot of the 5 key major indexes with simple Bollinger Bands. Remember, on the weekend I talked about these pinching Bollinger Bands. Energy was building for a big move and ended up being to the upside, okay, as you can see. The Dow here is lagging. The other indexes are making new all-time highs, except for the Russell, obviously, as well. Next, chart number 12. Here's the daily S&P 500 KISS. Again, it went long back here on May 3rd. It never hit its smart trailing stop there at 51.70. We've now rallied to a new high. That stop was nice higher low area where we didn't hit. And you can see the moving average ribbon, that first squeeze pinch. That's always a very low risk buy opportunity, that first squeeze. Chart number 13, here's the 4 time frames. Here's the daily up on the left. Again, you had the moving average pinch. Price held that ATR. We were breaking above the resistance cycle today. And we broke above the ATR on all the other time frames. Getting a little stretched here. You could see the A on the 78 minute. That's amateur buying. You could see the moving average ribbons getting a bit wide there. Next, chart number 14. Here's the daily S&P. Again, nice clean chart. Shows this 5-wave pattern. Like I said, this was my favorite option on the weekend, even though I showed the other option, just because it's so obvious. 1, 2, 3. You had a perfect little 3-wave pullback into the 50-day moving average. Again, that was a great area to put a stop. Remember, the KISS system had a stop just below that, which was the right place. And we're now making a new high in a wave 5. One thing to keep an eye on over time is this MACD divergence, unless it gets blown out. Chart number 15, here's the 60-minute chart. Shows you the same thing, just on a 60-minute, and it's broken down. Basically, what you had is a nested 1, 2, 1, 2, okay, account. So you had a wave 3 of 5 up here at the May highs. Then you had a perfect 3-wave A, B, C pullback into this demand zone. Price got into that we had drawn, rallied right off of it. Good place for a stop. The initial rally stalled at the supply zone, which it generally does. Pulled back, formed a higher low, and then it kept tagging it. The more times it tags the supply zone or demand zone, the weaker it gets. So then finally busted through it today. You also had a nice buy trigger on the RSI trend line. That also confirmed. Next, chart number 16. Here's a 2-hour view. So you can see we blew through that supply zone. Earlier today we were testing this channel. You can see we're starting to slightly break it. Chart number 17, here's a 30-minute chart. Again, just shows you the same thing. We pulled back into the demand zone last Friday, held that initial rally up, stalled at the supply zone, then we pulled back like 60 points, rallied, tested again, formed another higher low, a higher low. So again, kept weakening that supply zone, and then we just busted right through it today. Chart number 18, here's the triple Qs. Again, the same count, 8, 1, 2, 3, 4. We're working on this wave 5 now. You had the moving average pinch squeeze on that pullback. So we'll see where this goes. Okay. Chart number 19, here's the daily KISS. Now, interesting here, guys. So remember, KISS systems have been doing great on the Qs, right? It stopped out last Friday. It went back long again today. You see that? It says re-entry. So it got out and then it righted itself and got right back in. That can happen. Chart number 20. Oh, let's go ahead and move on. I meant to remove that image. So chart number 21, here's the KISS system from the KISS tables. So this one, remember, did not get stopped out. It actually held that smart trailing stop, and of course we rallied to a new high today. Chart number 22, here's the 4 time frames. Again, just like the S&P, we held the ATR, new all-time highs. We're above the ATR in all the time frames. A little stretched here short term, as you can see from the wide moving average ribbon on that 78-minute chart. Next. Chart number 23, here's the weekly chart of the Qs. This rising wedge. Now this rising wedge, guys, I know things seem great in the market, but I think this pattern will eventually play out. It is textbook. You have 5 ways, which is what you need in a wedge, and you have this weekly MACD divergence. My comments were, this is a weekly chart. Price could meander higher in this wedge for a month or two before finally playing out. Okay, so just because we rallied this week, does that negate the wedge? No. I think this wedge could hold. Price could stay in this wedge till sometime in mid to late July before it finally breaks down. Okay, but I think this will eventually play out. Chart number 24, here's the half-day chart. Again, perfect higher low pullback, new all-time high here. There is some MACD divergence setting up here, so be cautious here, chasing it right now if you weren't already long. Chart number 25, here's the 60-minute chart. Again, we held that demand zone last Friday. Initially, on Monday, we rallied up to the supply zone, pulled back, higher low. Then, of course, we took it out today. Chart number 26, Russell 2000, up 1.5% today. So it's been chopping around in this overall pattern. And chart number 27, here's the 2-hour chart. Okay, Russell's been lagging here a bit. Moving on, let's take a look at some of these indicators. Here's the VIX. So the VIX, in that pullback, 150-point pullback on the S&P, remember the VIX did bounce up into its upper Bollinger Bands where it found resistance. Now it's coming down again. Chart number 29, here's the S&P 500 versus high yield corporate. Remember I talked about this. These two move together. Just look at the charts. It's when you see divergences where you can get big inflections. But what I noted early this week and on the weekend was that high yield corporate was starting to move up. It was stronger than the S&P, and that was kind of an early warning that the market was going to play catch up and come with it, and it did. Next, chart number 30, here's TLT 20-year bonds. Remember, this broke its channel on Monday. Nice follow through. So remember, bonds and rates are opposite. So rates have been pulling back, which has been helping the market. Chart number 30, here's the 10-year treasury yields. You have the opposite. So this broke its channel to the downside. That's helping the market. Let's take a look at some bigger charts on the 10-year, what may unfold. Here's a weekly. Here I added a little trend line support. Honestly, this almost looks like kind of a head and shoulder. It's not really that symmetrical, but I mean, if the market really wanted to rally pretty good, maybe this breaks down and comes down lower first. Again, don't get me wrong, guys. The new normal in interest rates is higher. Interest rates are now in a secular bull market, but that doesn't mean you can't have a good pullback. So here's what I'm talking about. Here's a zoomed out view of the 10-year. So maybe you have some pullback like this. You have massive support down in here. I don't think it gets down into there, but that's massive support. Then I think it rallies up again to a new high. And here's the big picture chart going back to 1980. Remember, interest rates, yields were in a secular bear market for 40 years. 2022, it broke out of this 30-year channel. That's ended that secular bear market, started the secular bull market, which we've been moving up. So again, initial rally stalled around this 5% area, as you can see, little supply zone. Maybe this pulls back into here, but again, guys, you can see there was a major trend change here. So rates will be higher for a long, long time, but maybe in the shorter term, we can get a shorter term, intermediate term, we can get a pullback here in rates. Next, moving on to some of these market sectors, just cover a few of them. Here's XLK Technology. Again, that's what leads the market. Now, this hasn't made a new high yet, so be aware of that. It did put in a nice low on Friday at that 50-day moving average where the indexes did. Chart number 36, XLC Communications sector. This is one of the strongest sectors in the market, making new all-time highs. Chart number 37, Biotech. Breaking this flag pattern. I talked about this on Monday. I said it was looking pretty good. Plus, biotech tends to do well whenever rates are falling. So if rates continue to fall, that could help biotech. By the way, we got an amazing KISS system for biotech with no losing years historically that I'll be including in the high performance. Chart 38, transports, which as you know has been one of the weakest sectors since March, along with energy, but retesting this little trend line here today. Chart 39, financials, they're still holding this trend line for now, but not much of a bounce here today, only up 0.25%. Chart 40, XLI Industrials, so far holding this support. Again, you got resistance above these moving averages and, of course, the upper trend line. This area is a big support. If price were to come down again and lose that, it could fall to the 200-day moving average. But for now, it's still holding. Chart 41, home builders, also bouncing off this lower coil that I showed on the weekend, still holding it for now. Chart 42, materials, same deal. Bounced off this lower coil trend line, but still in the pattern. Chart 43, XLE Energy. It's been quite weak, as you know, since April. Couple dojis the last couple days. One positive, we filled that open gap finally yesterday. You see that? You have the 200-day moving average below. So it could have been a low-risk area to finally dip your toe in. I mean, again, main resistance is the downtrend channel line. Chart 44, oil services, same deal. It's in this demand zone where it's attempting to hold for now. And chart 45, here's the Chinese market. This is the leveraged ETF. Again, we had it as a long idea back here in April, which it had a heck of a move up into the mid-30s, stalled perfectly at that supply zone. You can see it pulled all the way back to the top of the demand zone. That was a good area to dip your toe in, which I talked about on the weekend. Great example is just supply and demand zones. Very powerful. Oh, by the way, guys, the moving average ribbon, you can see on that pullback, the first squeeze. Moving on to commodities, chart 46, DBC down 2.1%. So last week it stalled at the coil trend line, and it's been pulling back since. Chart 47, here's the daily. You had a tight coil, which matched the 50, 20-day moving averages there. Busted down on Monday or last Friday, and it's just been moving down since. It is attempting to find some support around this demand zone here, as you can see. Chart 48, crude oil, been pretty good sell-off from that supply zone. It came into this demand zone where it's attempting to bounce, as you can see. Chart 49, USO, crude oil ETF. Again, it had a little bearish pattern here, came down. Hasn't filled that gap. I'd like to see it fill that gap, but bouncing here a little bit. Chart 50, UNG, natural gas ETF. Again, we had it as a wedge pattern here back in April. Excellent percentage of move all the way to the 200-day moving average. It was just textbook. That was a great area to sell, take your profits. Pulled down to this little demand zone. Good area to dip your toe in. Now it's trying to bounce. Chart 51, copper. Remember, copper had a massive run this year. It got quite overbought here. Wide moving average ribbon. Nice pullback here. Now there's a demand zone here, and you have the 50-day moving average. The 50-day moving average hadn't been tested for a long time, and that usually becomes support. So you can see it's bouncing right off the 50-day here into the demand zone. Chart 52, DBA agriculture. Remember, this bounced off its demand zone, held that basically 3 times it tested it. Nice rally up the previous couple weeks, consolidated nicely here. So there you go in commodities. Moving on, chart 53, here's Bitcoin. Remember, I was showing this as a coil pattern on the weekend, and I said it was likely to move with the general market, and that's what it's done. As the market's moved higher, Bitcoin broke out of its coil, and it's had a nice move. Some of the stocks, ETFs, here's Bido, moving out of this little flag. Chart 55, Ethereum, remember, had a nice move out of that wedge pattern. Chart 56, ETHE, Ethereum Grayscale, hell of a move out of that coil. It's consolidating here now. Some others, chart 57, Mara. This is coiling nicely, one to watch for tomorrow. Volume starting to pick up on it. Chart 58, MSTR, MicroStrategy. We had it as a long idea back here in early May, inverse head and shoulder pattern, which played out. It's now trying to break out of a flag. And the final one, Chartber 59, CLSK clean spark in a coil pattern, bouncing off support. If you're long, just put a tight stop just below that 1530 area. Moving on, Chartber 60, here's US dollar down 0.4% today. Again, this week, no changes, still holding the support. You had resistance up here where it stalled a couple months ago. Chartber 61, US dollar daily. So we broke this uptrend line a couple days ago. Here I added a little downtrend channel to monitor. One thing to monitor over time is the Japanese yen. It's been absolutely destroyed, guys, since 2012. They've been destroying their currency. You do have this monthly falling wedge with MACD divergence forming. Again, I showed this earlier this year, but it's a monthly chart, so it's going to take time to play out. But eventually, this may form a decent bottom. Here's the weekly tradable ETF, FXY. Kind of a wedge look channel, some divergence. Again, I need a trigger to go long. I'm not long, but it's something I'm going to be monitoring going forward. And let's move into the precious metals. Chartber 64, gold up 1.2% today. We've been talking about this 50-day moving average, and price has bounced off of it for now. There's the demand zone here, which held. The thing that concerns me a little bit, guys, is the stocks have been underperforming here a bit. You can see the ratio broke this trend line. So I'm wondering if this forms a lower high and then comes down again. You can see you have a very obvious fifth wave up here. So if that's the true count, then I don't see gold going to a new high here right now, but maybe forming a lower high. Chartber 65, there's the weekly, up 1.3% for the week. Again, longer term, gold is broken out, so even if it does form a lower high and come down, I think it'll ultimately be a buying opportunity. My target for gold is up around the $3,000 area. Chartber 66, here's that inverse gold ETF. I mentioned this is an idea, but so far, stalling at that resistance area and the 50-day moving average, so it hasn't triggered. If gold does decide to finally pull back, maybe this will work out. This could be a potential target up into here. Chartber 67, silver, up 1.5% today. It's still below its 20-day moving average. Remember, this has had a heck of a move. Chartber 68, there's the monthly view of silver. Big move last month. Price pulled back from that initial supply zone. Again, this bigger picture view of silver, I think it's going to eventually go up to the upper 40s and eventually test that $50 range again. Remember, this was a 4-year coil and we've broken out. Next, here's a little fun exercise, guys. Looks like I got a little typo there. Forgot an L. Inflation. Anyway, so I own some physical gold and silver, and I own some bars and coins and stuff like that, but I also own a bunch of this, what you call junk silver. It's pre-1965 quarters, half dollars, dimes, and I bought some of that a couple months ago, and I was thinking about it. I decided, I looked up what the silver content was. So for the half dollar 1964, it's about 0.36 ounces. For the 1964 quarter, looks like I got a typo there too. Man, I wasn't good in English, guys. Hey, I got A's in math and science. I got C's in English. Okay, so that's my excuse. Anyway, 0.18 ounces of silver in a quarter. So so I did a little exercise. At 1964, the value of the silver in the half dollar was 48 cents. So just shy of the 50-cent face value. So for the quarter, the value of the silver was 23 cents, just shy of the 25-cent face value. All right, the current value of the silver is $11 for the half dollar and $5.40 for the quarter. That is an increase of 23-fold. Now, I wondered, well, how is this a good gauge of inflation? So I took the median home price in 1964 was $18,900. The median home price today is $412,000. That is a 22-fold increase. It's almost exactly with silver. So I've always heard that silver is almost a perfect hedge for inflation, and you can clearly see it here. It's amazing how close those two. Anyway, again, I've read things like this before, but it was just a fun exercise to do on my own. Pretty cool. Next, moving on, Chartbread 70. Here's GDX. You can see it broke down yesterday from that tight coil, but so far trying to find some support at the 50-day moving average. My concern here is this ratio has been leaking oil. So that's my concern. Chartbread 71, here's Dust, the inverse ETF. It did give you a good trade early this week, pulling back, but I'm wondering if it's going to form a higher low here. Chartbread 72, here's the BPGDM gold trading system. Remember, I've been commenting on this. It gave you a buy signal back there on March 1st when it was around the 17.5%. Recently, it hit about 90% with very strong MACD divergence. So definitely not low risk at this point, some of the stocks. In Chartbread 73, here's an example. It's a major silver stock, Pan American Silver. You can see it rallied nicely out of this weekly wedge, but stalling here initially at the supply zone, which you'd expect. Again, longer term, guys, I think it tags this supply zone and probably goes back to new highs. But for now, pulling back off resistance. All right, the final part of this newsletter, let's talk about our trade idea. So Chartbread 74, NEOG. This was a long idea in my Monday newsletter. Okay, I found it on my volume scan. You had high volume. You had a tight pennant here. Boom. Yesterday rallied almost 20% right into this supply zone. Awesome trade. That one trade could have paid for your membership for several years. Today got near the 200-day moving average. You can see the moving average was pinching there, just absolute textbook. Chartbread 75, AMT, another long idea from Monday. Pulling back today, but gave you a nice trade yesterday. Chartbread 76, Boeing, showed this kind of inverse head and shoulder look to it. It had a bullish symmetry break here, so that's what alerted me to it. And higher low, so broke the neckline yesterday, following through a little bit today. Boeing's got a lot of issues, quality control, whistleblowers dying mysteriously, you name it. But a lot of times when things look the worst, sometimes that's when the stocks bottom. Chartbread 77, GBTG, another long idea of mine on Monday. So initially yesterday, poked through that trend line, big pop today, up 4% on expanding volume. Chartbread 78, CNQ was a short we had. Broke down on Monday, continues to follow through. Chartbread 79, Irene, continues to follow through. Was original long idea back here in this tight coil, then formed another tight coil, which busted out this week. Chartbread 80, CXW, was a long from last week. It did break out of the coil. Pulling back today, though. Chartbread 81, INCY, another one that continues to work out. Nice volume patterns. Chartbread 82, Amazon, idea from last night in a tight channel. Slightly breaking that today, so you could have triggered. I'd put a stop right at that low, higher low there. It needs to get through these two moving averages now. You also might want to see what the KISS system's doing if it's long yet. Chartbread 83, Rivian. We noted that there's some call buying into July, so we thought this looked lower risk down into here. Chartbread 84, ADEA. This was a long idea from Monday. It hasn't broken resistance. It's got clear resistance right at 12. That was tested today. So we'll see if that can pop tomorrow or not. All right, guys, that'll do it. Have a wonderful evening. Thanks for all your support. And if you haven't done so, please consider subscribing to Breakpoint. We don't really have any advertising, so to speak. We mainly grow by word of mouth and maybe a little bit from YouTube. So we got a lot of referrals from friends and family telling their friends and family, and it's like a community. All right, enough of that. Have a wonderful evening. Take care.